What's poppin', billionaires gang? How you guys doing? It's your boy Spice. Welcome back to my channel. First of all, guys, I want to apologize for not being around for a very long time. As you guys can remember, I made a video about reviving a -11 percent account, my Forex fund account, and I told you guys that it was just remaining 4 to 5 days. Yeah, I'm so sorry. Unfortunately, we lost the account. We lost the account not because we violate any rules, not because we violate any daily drawdown or maximum drawdown. We lost the account because I couldn't trade on the account, right? I'm so sorry about that. I was not really okay. A lot of things happened at that point that I couldn't even post, I couldn't even do anything, I couldn't even trade myself, right? I couldn't even trade my account. So that was the reason, and before all those things passed, the account was already lost because it was just remaining just a few days, and I just got a message, right? I just got a message that the account is gone. So I'm very sorry about that. But guys, a lot of content are going to be coming out for you guys. So I'm planning on starting a flipping account challenge, right? So that video is going to be coming just right after this one, right? And I also have an announcement to make just at the end of this video, so you guys want to watch this video to the end. So guys, let's go deep into the video. As you've seen on the description, we are actually going to be talking about psychological levels. A lot of traders don't know the power of psychological levels. A lot of people, bunch of people don't know that psychological levels are really powerful. A lot of people don't know that. So I just want to teach you guys or show you guys the power of psychological levels. So I consider psychological levels as my own personal breakout test, and I can show you that this strategy is going to change the way that you see the market, the way you trade, the way that it's going to actually increase your profitability, and also it's going to increase your win rate, right? So if you have any strategy that you use, if you have any personal strategy, you can add this strategy as confluence to your strategy, and I'm very sure you guys are going to thank me later after watching this video. This video is going to change your life, it's going to change everything. I mean this. And let's just go into the video, right? I just don't want to talk too much, right? I don't want to talk too much. I just want to show you guys how to trade these psychological levels the right way. Without further ado, let's dive into the video. So let me show you guys how to mark psychological levels, right? First of all, guys, let's talk about what's psychological level, right? What is psychological level, and how is that psychological level, how is it powerful, and what are the concepts of psychological level? Psychological level is a price level in technical analysis that significantly affect the price. Typically, the number is something that is easy to remember, such as round off numbers, right? What does this mean, guys? What this means is that psychological levels are levels that bigger investors they pay attention to. Let me further explain this, right? We as human beings, we always think in terms of whole numbers. So let me just make an illustration. Let's say you want to launch a product. When you launch your product, right, you want to think in terms of the price. Of course, everybody, when you're launching products, you want to think in terms of what amount you want to put it out there, right? So we as human beings, we always think in terms of round numbers. So now you make a product and you want to sell your product. The first ideas that will be coming to your brain concerning the pricing is going to be should I sell it for $50? Should I sell it for $100? Should it go for $10? Should it go for $1,000? Should it go for $500? Right? So we as human beings, we always think in terms of whole numbers, right? Round numbers rather. So now you don't want to be thinking you want to launch your product and you want to be thinking, okay, I'm going to be selling this product for $37.5, right? That would be difficult for you to just sit down and think about that, right? Because generally we always think in terms of whole numbers. Just like you meet your dad or you meet your mom and you want to collect money from them, right? And you just want to collect money. It's not that the money is planned or you have a fixed amount of money you want to collect from your parent. You just need money from them. You need pocket money, right? When you want to ask your parent for this money, you want to talk in terms of whole numbers. Okay, mom, I need $200, I need $300, I need $400, right? Or even if you want to give your girlfriend money, if you want to send money to your girlfriend, you want to send it in like whole numbers. You think in terms of whole numbers. Okay, babe, let me send you $50, let me send you $100, let me send you $1,000, let me send you $5,000, right? Those are round numbers, right? Those are round numbers, easily remembered numbers. You don't want to tell your babe, okay babe, I'm going to be sending you, $36.87, right? It doesn't make sense, right? So you want to talk in terms of whole numbers, right? Round numbers. You want to talk in terms of round numbers. So that is where this concept of psychological levels comes, right? So bigger investors are always hanging around this round number. And as you know that we as a retail trader, we always want to follow the banks, we always want to follow the bigger investors, right? Because we don't move the market, right? So these bigger investors and the banks, they are the ones that move this market. So what we want to do as retail traders is we want to follow them, we want to follow and do what they are doing, right? So in that way, you want to hang at a psychological level before pulling your trigger. Pulling the trigger, you want to wait at that psychological level, because generally that everybody are thinking, the bigger investors are thinking in terms of these round numbers, right? So let me go to the chart. Let me just show you everything in the chart so that you can understand what I mean better. So let's mark the psychological levels and let's see the power of that psychological levels. So now, first of all, right, before marking anything, I want you to take a very good look at the chart, right? Take a very nice look at the chart, right? You can see right now, you don't know what is happening in the market. Everything just look, choppy. Everything doesn't look well. Everything just look, unclear, right? But let's put psychological level on this, right? Let's just mark psychological level on this, and you will see the beauty of what I'm saying, right? So first of all, guys, you want to start. You can start anywhere, right? You can start from this, 150,000, right? 150,000. So you can start from 150,000. The next psychological level is going to be 150,500, right? So that's the next psychological level, right? You want to put this here. Now the next psychological level is going to be 151,000, right? The next psychological level, the next psychological level is going to be 151,500. Oh, sorry, 151,500. The next one is going to be 52,000. Okay, next one is going to be 52,000, and the next one is going to be 52,500, right? The next one is going to be 53,000. The next one is going to be 53,500, right? The next one is going to be 54,000, right? The next one is going to be 54,500. So guys, the difference between these is just 50 pips, right? The difference between them is 50 pips. I haven't done that, so now we can see we now have a psychological level on this screen. All right, so the difference between let's say the difference between here and here is just 50 pips, right? If you measure this, it's going to give you 50 pips, right? So now you take the difference between this one too is 50 pips, right? So when you mark your 150,000 or whatever round numbers you have on your chart, when you marked it, what you want to do is just add 50 pips to that. It will give you the next psychological level. Add another 50 pips to that, give you another psychological level. 50 pips, 50 pips, 50 pips on that. So you can see now we have a key psychological levels on our screen, right? Beautiful as that. Now let me show you something, right? Let me show you the power of psychological levels. Now you can see the naked chart you saw before was different from what you're seeing right now. What you're seeing right now is just some kind of screen, and I think it's starting to make sense to you, right? It's starting to make sense to me. So but I will explain further so that you can see what I'm actually seeing. So I'm gonna be marking some zones for you so that you can see how powerful psychological levels are. So you can see, let's start from here. You can see price got to these psychological levels and bounce away, right? That is one. Price got to this psychological level, bounce away. Price got to this psychological level, bounce away. Price got to this psychological level, bounce away. Price smashed through this psychological level, got to this one, bounces back up, got to this one, bounces to the downside, got to this one, bounces to the downside. Right, what is this telling us? Right, let us make this an illustration to just this feel, right? What is this telling us? This is telling us the power of psychological levels, right? You can see that every single time price got to this point, right, it reacted, it flies to the downside, right? You can see here too as well, when price got to this point, price reacted at just these psychological levels again. After getting to that psychological levels, you can see price reacted and pushed back to the upside, right? Price broke this point, right? You can see when price got to this psychological level again, what can you see? Price rejected it very fast, right? Price got to this psychological level again, you can see it bounces back up. Got to this psychological level again, it bounces back to the downside. Now, what is this telling us? This is telling us that the biggest investors, right, the market movers, they are always hanging around this psychological level. That's the reason why you can see that every single time price gets to that psychological levels, there's always reaction. Of course, don't get me wrong, there are times that price will get to that psychological levels and not react at all. Just like we see here, there was a little reaction here where price, pushed to the downside, right? But the buyers were able to win the market and push price to the upside, right? Now we can see that price didn't react to these psychological levels at all. Price just smashed through. Price didn't react to these psychological levels at all. Here at this point, price just smashed through, right? That is the reason why if you want to trade this strategy, you will always have a trading plan, right? You always have a trading plan. You have something you want to use as confidence, right? This is the power of psychological levels, and this is what I do, right? I've been doing this for over a year now. This is what I do. This is what I'm doing always, all the time. This is what I'm trading, and I'm always improving, and I found my profitability. Now I won't just give you the power of psychological level alone and just tell you, okay, go and figure out how to find your strategy to trade it and all that. I won't just do that, right? I will make sure that as I'm giving you this, I'm going to be giving you a strategy to trade it, right? But unfortunately, this strategy I'm going to be giving you to trade it is just going to be giving us just one-to-one, right? It's just going to be giving you one-to-one risk to reward. But if you try this all the time, you will almost win all the time, right? Except if there are fundamentals or something that just make the price misbehave. Of course, you can't win all the time, but your win rate will be higher than your losing rate, right? So now I'm going to be giving you a one-to-one risk to reward strategy. If you check my channel on Telegram, you can see I call trades out almost all the time for free, and of course I trade these psychological levels, and I'm able to get in very early, which I call my sniper entry. Get in very early and catch 1 to 3 risks to reward. The one I want to disclose here is going to be one-to-one. You can go try it, right? You can go try it, or if you want to know how to catch the 1 to 3 risks to reward, you can join my Telegram channel. It's just for free. Join my Telegram channel and see everything. As you can see, I'm showing you on the screen. You can see that's my Telegram channel where I call trades out. I give free trades out to people, right? Trading just these psychological levels. That is just what I do. I don't mark break and retest on my screen. I just do key psychological levels, and this is very profitable and less manipulated. Now let me show you how can you trade this strategy, right? Let's go to H1. Basically, I trade it on H1. I look for my entries on H1, right? So what I want to do now is let's start from this first one, right? And I want you to go backtest this with other pairs too. Backtest with other pairs, the same thing. Just mark key psychological levels and do the same thing I'm telling you, and you'll be so surprised. Right? So now let me show you how to trade it. So what you want to do is, so from here, okay, so the first rule is make sure that you see 2-week rejection, right? So let me write it here. This is the 3 things we want to pay attention to. You want to wait for price to get to these key psychological levels, and you want to be patient for rejections. The rejection can be engulfing candle pushing back. The rejection can be double wick rejection. The rejection can be a rami or whatever candlestick pattern. Let me give you an example on how you can do that. So now, first of all, price got to this key levels, this key psychological level, and the second candle we can see rejection. We can see the first week rejection, and we can see the second week rejection. Mind you, we can look for entry just immediately after this one closes here, because this candle already touches the psychological level, and the second candle here was a rejection. You can be patient and wait for the other candle, but you can also wait at this point, right? You wait at that point. All you want to do is you want to click on sell at that point, because price is already rejecting key psychological levels. So what you want to do is you want to put your stop loss middle of the upper or the lower psychological level. Let's say if you're trading on this psychological level, you want to put your stop loss at the middle of this guy. If you're looking for your entry just at this point and you want to sell to the downside, right? You want to sell, right? So now your stop loss is going to be middle of this guy here, this guy here, and this guy. Your stop loss is going to be middle of it, and your TP is going to be here, the next psychological level. Say if you're looking for entry here and you want to go long, right? If you're going long, your stop loss is going to be middle of this guy here, and your TP is going to be full here, right? If you're going short, your stop loss is going to be middle of this guy here, and your full TP is going to be here. So very simple as that. Let me show you. So now if you're going to calculate the middle of this guy, you can see just around this point, like this is 50 pips, so we want to remove like 25 pips. This is like 25 pips, right? So we still even need to push this guy up a little bit. We need to push this guy up a little bit to make it 25 pips. So what you want to do is you want to push this guy here, and what you want to do is you want to target the next psychological level, right? You want to target the next psychological level, right? So now you can see this trade is going to give you, 1 to 1.5, right? 1 to 1.5 risk to reward. That's what this trade is giving us, 1 to 1.5 risk to reward. So you're going to leave that like that, right? So now when you go to this psychological level, it depends if you're the type that wants to trade, along with the trend, or you want to trade both, along with the trend and against the trend, right? It's not advice for you to trade against the trend, okay? I hope you guys know that it's not advice for you to trade against the trend. But if you want to trade against the trend, good. If you want to trade along with the trend, so if you're trading along with the trend, what you know is you're going to be making sure that you're going to be looking for entry along with the trend. If the market is on an uptrend, you're going to be looking for buys only. If the trend is on the downtrend, you're going to be looking for sells only, right? So but if you want to trade both movement and the pullback, you can also do this one. So just at this point now, we can see that price got to this point. If market move like 40 pips to 41 pips, you can start looking for entry, right? If market move 40 pips to 41 pips, you can start looking for entry, and we're going to be applying this to whatever trade we are going to be taking, right? So I've tested it and I know that this work all the time on all pairs, right? So you can see from here, when price got to this point, we started looking for entry just at this point, because price already moved like 40 to 41 pips, or even full, right? 40 to 50 pips, right? So now we can see that price got here, and the next thing we saw was a rejection, was a weak rejection. So at this weak rejection, you can take the trade, or you can wait for the next candle to give you another weak rejection. So if we are in on this trade at this point, our TP is going to be here, and our stop loss is going to be half, right? Our stop loss is going to be way half, right? So on this trade now, you're going to be making like 1 to 1 risk to reward, 1 to 1 point something risk to reward, right? Very good trade, right? 1 to 1 point something risk to reward, right? Very good trade, right? And at the end of the day, the trade works out, right? So what you want to do again is What you want to do again is you want to be patient, for price to show you some kind of rejection on the key psychological levels. Now, as you can see at this point, right, market didn't reject these key psychological levels, right? Market didn't reject this key psychological level. Instead, what you can see is price got to these key psychological levels and just smashed through, right? Price smashed through. What you want to do is you want to be patient. As price has smashed through the key psychological levels, you want to wait for the next psychological level, right? Please take note of all these things I'm saying, and it's going to help you grow a long way. You can see this is another key psychological levels. What are you waiting for? We want price to move 40 to 50 pips, right? Because you can see price already moved. This is 40 pips. If you can see from here, this price here at this point is not up to 40 pips, so you want to wait for it to move 40 pips. So our 40 pips happen just around this point. This is the candle that gave us our 40 pips, right? So now after getting the 40 pips just around this candle, what we want to do is we want to wait for some sort of rejection, right? We can see that this one rejected, and you can see another weak rejection just at this point. So what you want to do is you want to hop in the trade, right? You want to hop in trade just around this point, and your stop loss you want to put it just around this point, and you want to target just this next psychological level. It's easy as that. Now you can see we catch another 1-to-1 on this trade again. Very, very simple, guys. Very simple. You don't need to stress yourself too much. We catch another entry just at this point again, right? What you want to do again is when price got to this key psychological level, you can see this market got to this key psychological level, and what we had here was a break, right? Price break this point. Price break, didn't reject it, but breaks it, right? But breaks it. So now we want to be patient, right? You can see the next zone. As you can see at this next level, you can see that price move above 40 pips just at this point here. So this candle here was the one that moved just above that 40 pips. So what you want to do is you want to be patient, and what you want to do is you want to enter the trade just exact time when you have 2 week rejection. So we have this 1 week rejection, and this is the 2nd week rejection. What do you want to do? You want to enter the trade just at this point, right? You want to enter the trade just at this point. Okay, you want to enter buys, target the next psychological level, and what you want to do is you want to put your stop loss just in the middle, right? In the middle, and you can see now we catch another very big fantastic move, just like that, guys. Very simple, very simple. Go back, there's this. But one more thing I want to explain to you guys, okay? I know some of you guys will say, okay, what if I get to key psychological level and there was no weak rejection, market breakthrough and pushes back in? Right now, let me explain that concept. So what you want to do right in this situation is if the market break below, you want to wait for price to continue to the downside or possibly closing back in. Right now, market broke below, market was rejecting at this point here. You wanted to get into this trade. This can pass for rejection. This can also pass for rejection, but we want to see something like a wick where the wick is bigger than the body. But in this case now, there was no any wick that is bigger than the body. When price break to this downside, we were waiting for price to come here, but instead the price closes back up, right? Closes back inside this key psychological level. Of course, we can enter buy just at this point. We can enter just this buy because we had this candle close inside this psychological level. We can enter buy, and if you had enter buy, this would have been wrong, right? This would have been wrong. You would have been stopped out. And you can't win all the trades, right? You can't win all the trades, right? So at this point, you can see. Also, at this point, you can see when price got to this point, you were patiently waiting for price to give you weak rejection, and as you can see, we had the 2nd week rejection and we got stopped out, right? Good, right? Something like that can happen, right? Something like that can happen. But let me tell you something, when something like that happens, trust me, your wins are coming on the way. So you can see when price push above this point, you can see market also tends to continue to push to the upside, and this candle pushes back in, right? When this candle pushes back in, you could have entered the trade and you could have win the trade just like that, right? When this price smashed through this guy here, you were waiting just around this point, and when you were waiting around just this point, price got to this point. Price didn't get there very well because I'm sure this one doesn't get to 40 pips, and when price just get here, price bounces back up, right? So now when price bounces back up, you want to wait for price to close back up, right? So at this point now, you can see price close back up, right? Price goes back up. You could have entered the trade just because price didn't get to this psychological level, and price might not get to that psychological level anytime soon, right? That means price wants to go back to test this psychological level again, right? So now you might enter buy at this point and would have catch it. So, and I know some of you guys are going to challenge me and say you are not back testing, you're only doing what you're saying, it's easy to explain, it's easy to this, it's easy to that. But guys, and I'm sure some of you guys that take your time to go back test this, you will come back and and start praise and start saying good things about it. So you can see that is just simply the power of psychological levels. So I want you guys to go please go back test this strategy, back test everything I've explained to you. Let's quickly make a recap, right? So what I actually taught you guys was how to trade key psychological levels, and I told you guys that the bigger investors and the banks are always hanging around these round numbers, which is psychological levels. And I also told you guys that you can trade key psychological level following the trend, or trading both the trend and against the trend, right? That the both works, depends on which one you want to take. I also talk about how to enter trades. I talked to you guys about taking 2 weeks, seeing 2 week rejection before jumping in, or when price breaks above, you want it to close back in so that you can enter the trade. I taught you guys too, and I also taught you guys where to put your stop loss, right? Where you put your stop loss, and I said you have to put your stop loss just in the middle of the previous psychological level, right? I want you guys to watch this video over and over and over again, just to understand the entry, how to mark key psychological levels, your take profit and your stop loss zones, and what you should do if price break above, and what you should do if you have 2 week rejections. That's what I want you to take from this video, and trust me guys, you will be surprised. You'll be surprised with the result, right? You can join the community, because this community on the Telegram, this is what we do, right? Join my Telegram channel, let's be family, and you can ask me any question you want to know. And of course, I used to post my trades, and I used to find my 1 to 3 entry on this same strategy. I want you guys to give this video a thumbs up. I hope this strategy helped you guys. I hope you guys make a lot of money from this strategy, and I hope you pass your my Forex fund account, whatever any challenge you're doing, whether FTMO, whether my funding talent, Fivers or my Forex fund. I hope you pass, and I hope this help you guys. So I will see you in my next video.